Welcome to another video tutorial of Forex ID Academy series. We're watching the chart, the 30-minute chart of Euro-US dollar pair, and it's the chart which shows the price action of 12th of October 2012. And you can see the two white vertical lines signifying the beginning of the trading day and its ending. What I want to show you is how we can have a simple chart, a clean chart, how we can use price action and a very valuable tool which is average directional index, ADX, to spot profitable trades as intraday traders. This is not the kind of trading for a newbie. Of course, it doesn't mean that you can't test it, but please test it on your demo account. And once you are confident enough and you have practiced enough your techniques, yes, you can go to your live account. But you should start with bigger time frames, daily time frames, or 4-hour time frames before, and train for a few months before you go down to 30-minute charts and so on. That's just a friendly warning. And now let's go to the subject of this video. Here you see the average directional index. This line with turquoise color represents the index. It's a 14 periods index, and it comprises of two partial indices: the directional index plus, which I symbolize here with green color, and the directional index minus, which I symbolize here with red color. So I can have a visualization of the price momentum. What average directional index shows is not exactly the direction of the price action, but it shows the strength of the move. It shows the momentum. It shows how strongly the move, how strongly the price moves. So, but I have found out with observation and experimentation and a lot of trades and setups on my demo account that we can actually spot the trend reversals, and we can spot them successfully even in short time frames, in small time frames like the 30 minutes chart, if we use the two directional indices that comprise ADX in conjunction with ADX and with price action. So what we can see here are two profitable trades, one to the bullish direction, which we took here, and another one to the bearish direction, which we took here, and which were early on spotted thanks to ADX and the two partial directional indices that make it. So as you see, we had a bullish crossover here right at this point. You had the directional index plus going over the directional index minus, and at this crossover my eye went to ADX, which I wanted to be above 24. it was above 24, and it showed that it was on an increasing move, and so I took this trend, I took this trade entering long, and I was watching as I was in, and the price was moving for the next candlesticks. I was watching if my DI plus was moving upwards, if it was moving towards 30. I was on a very good trend. I was riding a very good trade, and when I noticed that it formed an angle, it formed a knee here, I immediately closed my position. The ADX kept going up, but the DI plus formed an angle, and that showed that something changed to the direction of the trend. And yes, it did change. If you take this vertical line at this point, you will see that we had after this candlestick close, we had an immediate big bearish move. Okay, so I was saved literally at the last moment. I saved my position, I closed my position, and I took my profits and exited the trade. I watched the price moving, and I watched the two indices, DI plus and DI minus, moving, and when I spotted a new crossover, which was a bearish crossover this time, because the green line, which represents the DI plus, goes below the red line, which represents the DI minus. So that's a bearish crossover, and with the same rules that I used to enter the previous crossover, I now enter short, and I just make sure that ADX is over 24, which is true. It's over 24 and it's increasing, so I'm on a safe bearish trade, and I keep my eye nailed on the DI minus, and the very moment I see that it forms an angle, I'm out. I close my short position, I take my profits and go out. I don't wait to see what happens with ADX or what happens. I just go out. And thankfully I did, because as you will see, right after this candlestick, which is exactly at the point, if you take the vertical line, it's exactly at the point of the knee of the angle, which is formed by the DI minus, I have a reversal. I have a trend reversal. So I exited at the best possible point, so I milked out this bearish trade as well. Use this tool, is excellent. Just practice a lot with your demo account first. Practice with many time frames, not only one. Practice with many pairs, not just euro, US dollar. If you want to simplify your picture and your chart even more, use the trick that I love to use, which is using, instead of candlesticks view, I use the price line view. So the price line simplifies the way I see price action, and although it seems childish, sometimes it helps our brain work better with the data that really matters. The more data we have to analyze and the more data we have to, um, to compare, the harder it is to reach a safe conclusion and to make our decisions. So if you see a crossover here which is bullish, which is bearish, sorry, and at the same time you see such an angle here, you see such an acute angle, jump in. If you see a crossover here with a directional change, this is not acute here, but it's a directional change, jump in. You see a price action which is almost vertical here. Be sure that this is a continuation signal. You also see a price action which is almost vertical here. That's a continuation signal. It can't get any simpler than that. So make your life easier. Use as fewer tools and make your life simple by feeding your brain with less data and analyze only what matters. There's nobody there to tell you if you are brilliant or you are dumb, okay? It's you and your chart. So you know yourself, you know who you are, you trust yourself, you appreciate yourself. So be simple and keep it simple. Happy pips, happy trades.